Hi everyone, Bharat from rabbitcha. Welcome to rabbitcha. We're here to discuss something that's special for today, which is Fed monetary policy. And I mean, pretty much most of us know the direction of it, but we're here to dissect what could be the impact, what could be the English around the math, and so on. What could be the effect on crypto? Is the long awaited boom here, or is there still more time to go? On other asset classes, real estate, tech, whatever else. Hey, Balaji.
Hey Bharat. So yeah, it's very important day, in the sense that uh, uh, we know that the Fed there will be rate cuts, but we don't know whether it's 25 or 50. Most likely,
Right.
it could be a soft landing, as generally expected from Fed. We don't know yet, but we can speculate on that. So, what do you think, Bharat? How is it going to what's your take on how is it going to pan out on the markets after this? Yeah,
Right. So here's the deal, right? So till now, the monetary policy was tight, right? But there was an expectation that it would start loosening at some point.
right,
So given that, the markets have run up. So the question is, is the loosening or the extent of loosening or the streak of loosening already in the
right,
price, or some of it is yet to materialize in the price, right?
right.
So I think that's the most important question. So very, I mean, in my mind, I'm just borrowing CNBC's Mike Santoli's words. So
Right,
I don't care if it's 25 or 50. What I care about is the language around it.
right,
Right. And soft landing is I think the assumption that the market is going with. That is
right.
the soft landing on the economy,
That's
right?
correct. Yeah,
That
yeah,
a recession has been averted, and that's what the numbers seem to suggest,
yeah.
right? But I think, I mean, part of the reason the Fed is cutting is also that, if they do not start loosening the policy,
Right.
the soft landing might turn itself into hard.
Correct, correct. So
Because inflation, the CPI is at 2.9%, still above the 2% target of the Fed.
that's good. That's correct. That's correct.
That,
I
that's
mean,
that's the most recent
it would be too late if it's delayed further. And it rightly said it could lead to a hard landing. Yeah. Uh, Good point made there. So, how do you think? So, the other sectors like let's take the real estate, banking, uh,
time.
would look at it,
Right. I think so. I think so. These are the two most rate sensitive parts of the economy, right?
right?
So real estate, I think what happened was that I mean there's still a housing shortage. Uh, so I think the domestic or the home segment of the real estate will continue
Mm.
to boom, right? And the rate cut is an added help
Right.
because more people will be willing to take on a mortgage.
Mm.
And people might even start looking to start a floating rate mortgage now and lock it in later when they think the interest rates have bottomed out.
Right.
So I think from a demand side for real estate, the home segment of real estate is good, and I
Mm.
suspect it's going to be good for at least 1 or 2 years.
Right. Right.
For the commercial segment, right? So there are two villains. So there is digitization and there is work from home.
Right.
I mean, you can see, uh, skyscrapers on Broadway, 200 yards from Wall Street,
Right.
either empty or being occupied by, uh, you know, rundown retail.
Right.
So, so yeah, so
True.
uh, I don't think this is going to do anything to change that.
Right.
Either digital commerce or work from home and
Right.
their impact on commercial real estate. I don't think that's
Yeah.
going to change because of.
Right. What about residential real estate? In the sense, the because of the lower borrowing rate, I think
Well,
don't you
as we talked
think that
about,
there will be
that's definitely looking good for a couple of years.
right?
Like, I mean, if I were buyer in the US, I don't believe in buying homes anyway. But if I were in
Yeah.
the market to buy a home,
Right.
I would get into floating rate mortgage at the moment, and I would lock it in later. I think interest rates has no more way to go down.
Right. Right. Yeah. And of course, the bond yields would be lower now, and we would see a lot of influx into the equity markets. Uh,
Right, all markets, gold, equity, bond, everything. Uh, I think bonds is one segment where the expected loosening doesn't have too much of an impact, and I mean it takes actual loosening. So I
yeah.
think that's one piece this will affect big time, and in a bullish way,
True. But then
right?
again, there could be a price corrections as well in the equity markets. So
That's possible. I mean, a lot of hedge fund managers and analysts that I hear and speak to uh, are like, this is a stock pickers market. I cannot buy the entire market now because the
right.
valuation is not attractive enough. I mean,
That's correct.
that's what I'm saying, and I think that's partly true as well.
Right.
Because I mean, it's not a place where you could buy just about anything.
True.
Because like we discussed, equities are forward-looking,
Correct.
and the loosening is already in the price. A lot of it is already in the price. And look at the leaders of the market, the mega caps. The
Right.
Apples, the Microsoft, the Nvidias,
That's right.
right?
Yeah.
I
Yeah.
mean, they don't need debt,
That's true.
right? I mean, so they don't have to care about the cost of debt, right?
Right.
So, I mean,
Uh,
the only thing it can affect them positively or at all is, it makes easier for their customers to do capex.
correct.
Build data centers that can do a lot of AI, whatever.
Right. Right. Right.
Yeah,
Good. So I think coming to the banking sector, I think
yeah,
they would have compressed I mean, their profits would get compressed, of course, because the lending rates would also come down. However,
right.
there could be an increase in the quality of assets as well because, the earlier,
Of course,
the higher,
they
yeah,
would hold a lot of bonds,
right.
uh, especially U.S. government bonds,
That's right. Yeah,
right? So the market of those assets will improve,
right,
right? And the ability to lend more
right,
will come in, right? So while the margins might get compressed on uh, I mean, not on a percentage basis, but let's say on a net interest margin basis,
right, right. Yeah,
right? So if it was 2%, it might become a percent and a half, or whatever. If it was a percent
that's
and a
correct.
half, it might become 1%. That's
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 correct.
still that's possible. But
Right.
at the lower cost of capital, you would also be able to lend more.
True. Yeah,
Yeah.
yeah.
So I do not think this is a negative for the banks because
Mm.
margin is not everything.
That's right. Absolutely. That's what because it's
And
a
banks are
balance
not
between the
constrained by
quality of assets and the margins. Like you said, margins is not
and,
everything.
and
Yeah,
also the volume of assets you can put to work.
True. Yeah. Good. So, I mean, coming to the next interesting topic, the crypto, right? So,
Hmm.
given that the ETFs are already, especially the BTC, the BTC ETFs already running from January this year, right?
Right,
Uh,
absolutely.
and some easing in the crypto uh, uh, regulations and investment regulations.
Right.
How do you think that it's going to there?
Okay. So two things, right? So let's separate the uh, politics, that is regulatory aspect, from the interest rate regime, right? So talking interest rates, just interest rates per se, right? It's good for any risk on asset, or you know any asset that performs well under inflation, be it equities, be it gold, be it crypto, right? This is good.
Right. Yeah, because the
Right?
cost of funding goes down, therefore,
Cost of funding
you could
goes down,
see,
and because of the soft landing, hard landing, whatever landing it could be,
yeah,
right?
right,
The Fed is injecting a bit of inflation
true,
by
that's true,
by cutting the cost of money,
right, right,
right? And so money supply will also follow the interest rate policy,
hmm,
right?
right,
So it's
yeah,
good for all risk on assets, right?
hmm,
And yet another thing.
hmm,
So a lot of let's say USDTs,
hmm,
stable coins
right,
that were put to yield farming
right,
can now be put to active investing, trading, whatever.
absolutely, yeah, yeah,
So the flow into volatile coins could increase
hmm, hmm,
from stable coins.
right,
So that's another effect,
right,
right? And generally, when the risk-free rate of interest goes down, people look to take on risk.
true,
So
absolutely.
I guess that should play out.
Wonderful, wonderful. So let's summarize this. What are your take on the short-term impact and long term in terms of 1 year down the lane? How do you see it going to pan out? So what your suggestions for the immediate uh, you know impact and the long term?
We're all dead in the long
Right,
run. But that being said, right, but that's indefinite. So uh, since death is certain, but the timing of death is uncertain, uh, what follows is the flawed assumption that we're immortal, although that's clearly flawed. But
right,
uh,
yeah,
but that's the right that's the way human mind works. But let's park that. So I think ultra short term uh, U.S. Treasury bonds definitely are a good play, and Bitcoin, the cost of mining is still above the market price,
mm,
and given the trajectory of the cost of money,
mm,
we know where it could be headed. And
right,
God forbid if there were to be recession and quantitative easing, think about where that could drive Bitcoin.
right.
I mean, in that scenario, a quarter million is not impossible.
No, it's true, absolutely, yeah,
Yeah. So, uh, and the rest of the asset class just follows. All right. I mean, here's the thing, right? The cost of mining and Bitcoin itself access support for the entire ecosystem of altcoins.
right.
Yeah.
Wonderful. So, anything else that you want to add, Bharat?
Well, I mean, so we did talk about AI. So what do you think of the Fed policy on AI, or it's unrelated?
Um, I think it's not too much related. So, I mean, why I would say that, because there are a lot of things already factored into AI.
Okay.
So a couple of cycles of such things from Fed, probably,
Okay.
it would be, better. But as of now, I don't think so. There will be a, huge impact there.
Okay. I mean, I believe it's uh, a loose monetary policy is good for the customers of AI because it's capex intensive.
Yeah.
I mean, I'm talking about enterprise customers of AI. One of the pointers I
Right.
came across last week is Oracle, which was not an AI play at all, and old style enterprise software, some hardware business,
Mm.
and they're apparently flooded with a lot of latent demand, and they're begging Nvidia for more chips, even at a higher
Right.
price.
Right.
So, and that's also visible in the stock market. But again, 1 week, 1 year, all of these things could be blips in the long term. Uh,
That's true. Yeah. I,
but
I, I I
I
wouldn't
mean,
say
one,
there
one,
would be, yeah.
one takeaway is that, the enterprise spending on AI could definitely get a boost. Not that it will. I mean, this on the supply side of AI, there could be screw ups, there could be failures,
Yeah.
uh,
Yeah. Yeah.
there could be better
Yeah.
innovation, there could be anything. Uh, but on the demand side, this is definitely good for the demand side.
Yes. See, what I would say that is, yeah, there would be some impact on a long term basis, maybe in 1 year down the lane. Okay, but
Right.
immediate impact, I don't see an immediate impact on the AI front.
Yeah, again,
Yes,
that's
of
actual
course.
cost of debt, right? I mean, that doesn't work
Yeah.
out as actual cost of debt.
No, that's true. That's true. Yeah. So, yeah, wonderful. So, I think we have covered pretty much everything. I mean, whatever we could in the short time. Uh, so I think, let's wait and see, how it pans out. So yeah, that's about it from rabbitcha Money. Um, Thank you. Please subscribe, share, and comment on our channel. Yeah, goodbye.
All righty, thanks a lot. Bye bye. And maybe we'll see you again in a couple of days to do a postmortem if that's meaningful at all. No, this
Yeah,
is not a promise, but if there's something that we're discussing, we will discuss.
true. We would try to do that. Yeah, wonderful.
Also,
Yeah,
okay.
yeah. Bye.